Welcome back to Power Lunch. We're talking now to Rupen Patel, who is from Patel Engineering. The markets had been anticipating that they would move into real estate, but I understand, Rupen, real estate plans are on the back burner. Talk to us about them. Have you made up your mind? We're not touching real estate?
Yeah, we owned a historical land bank which we were going to monetize for the benefit of the shareholders. We have recalibrated the plans, and I think we'll wait for the markets to improve.
Okay, when you say you'll wait for the markets to improve, can you give us an idea all the same? What kind of land bank have you been sitting on, and how much of a reworking has happened on its valuation since the markets fell?
The markets have corrected in different places. We are sitting on a land bank of more than 1,000 acres in major metros, like part of it is Bombay. You have Bombay, you have Hyderabad, you have Bangalore and Madras. So what we were going to do is monetize it by building on it various projects, be it SEZs, residential and commercial spaces. But right now we've just kept plans on hold and further watching as to what happens with the economy.
Having said that, should one safely assume even other cities beyond Mumbai will not see any plan? For example, Bangalore, Hyderabad, relatively less hit in the real estate drag. Would those also remain insulated at this point from your real estate plan?
Come again? Can you repeat the question again, please?
Would you leave Bangalore and Hyderabad real estate also untouched, or do you think those markets are still all right for you to step in?
Bangalore looks pretty okay. Hyderabad, I think the supply is a little excessive. I think Bombay and Bangalore would probably buck the trend. I think the upswing will be much faster back in these cities.
Okay. Plus, you've also talked about a special economic zone. Is that specifically the only piece that you own in Hyderabad, the IT SEZ, and that too is off for now?
Yeah, the IT SEZ, there are 2 IT SEZs which were planned in Bangalore and 1 in Hyderabad. So I think Bangalore may take off, but after some time.
Okay. Let's talk about business operations beyond real estate, especially since costs are going up. And I noticed in the third quarter for you, the interest costs moved up very sharply. Actually, in terms of percentage, nearly 500%. Now, what is the reason for such a solid increase in interest costs? And how are you dealing with it, really?
Right now, I think one of the reasons of interest cost is that we have got huge orders from the clients as well right now, and we've taken advances. The huge increase in interest cost is primarily due to the debt taken on by the company. And I think that this is the max that the interest cost will be at. Right now, the debt equity of the company is around 1.3. Which I don't think is high. The interest cost that you see before comparison would not be the right figure, because the year before what you saw was net interest, and we had a lot of IPO money lying with us, so the figure you're seeing is net of interest. So the comparison would not be comparable. It would probably be comparing like apples and oranges.
Okay, so you're saying that even if one sort of takes that away, you probably are better off in the debt equity ratio. You said it's 1.3, but because you've been looking to expand, and generally the power side, like 1200 megawatt thermal power plant has been talked about, you're looking for land in Gujarat. For all these new operations, are you not requiring cash, and is that coming in from further raising of debt?
No, right now, like I mentioned earlier, we have recalibrated our plans in terms of expansion. We are right now concentrating on our core business, that is infrastructure development for the government. What we have seen on the basic side is that growth in the order book has been very, very substantial. Traditionally, order book grew at around 34% year on year, but this time I anticipate by the end of the year, the order book should grow in excess of 60%. Because I think that the government spending will increase even further. So that is what we are concentrating on right now.